General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's get the work done. Today's Tuesday. Not really a big news week. Today was an expansion day on NASDAQ. I was sidelined for the stance. Confidence level was medium. Didn't really see the conditions I wanted to trade. Price delivery, even just how I just delivered. The anchor point, it could be Monday for NASDAQ. Spot took the low. Also Wednesday could be the anchor if we want to sell. We left double highs, so I think we still push higher for the month. Expansion is playing out. We did hit the 30K. Alright, NASDAQ 15-minute chart. Nice push up, but we didn't get any stop hunt. Just saw retracement ideas, internal range liquidity, order block, and we didn't take this low, but we did take the high and closed above it. On the H1, it's not really strong, but we did close above Monday high. You can count this as a retracement, but this is still perfect for OTE, internal range liquidity sweep, or that order block. So I like buys from here or sales from here. Keep it logical. And then the daily, I'm just watching Monday's high. Let's see if we're really gonna hold this level. We could retest it and buy from it, or the opposite. SPX, it's kind of weird because we took the lows on the SPX. We didn't take the high at all. So that's a sign of distribution. But we've been getting there for weeks now. You can't just trade the SMT at the highs. And this is a tacky day. We didn't even retest the new day opening gap. Kind of chilling on the weekly open. But definitely not looking like the bull market. The daily, not an inside day. I was looking at this, just the monthly range for May. Since this is week 5, again, if we want to retrace get that monthly TGIF. We need to come down here. That's about a 20% retracement on the monthly. Looking at the stock charts, the SPY, it's a little doji day. The Qs, much stronger. And Nvidia, but this guy not going. So everybody else is fake bullish, but Nvidia printed a doji. So I want to see if that's really going to go. And while I was sideline the correct stance, it was seek and destroy. We had both sides of Asia range swept. I'll be looking for that. And maxed out ADR. So we would need to be true to engage. No maxed out ADR, seek and destroy. That's obvious. What did price deliver? It was a good day to skip. If then next for similar day, just keep going. Framework played out. We're waiting for some clarity. Go. And tomorrow, I just want to see if price really wants to go buy. Because I'm okay with buying, even though we at the highs. I'm over it. But this is not from here made sense, but not here. So we'll see how that goes. That's that on that. Have a good day. Peace.